Hello and welcome to tutorial 144, and I had a question from a Gold Pass member, and that was he was creating a strategy using a couple of oscillators, and when the oscillators crossed he wanted to make an entry, but he didn't want to make an entry at the price where they crossed. He wanted to delay that by a certain number of ticks. So let me just give you an example. This is similar, I think, to what he was aiming for here. You see, we have a cross, and we don't buy at the open of this bar or near it. What we do is we delay that buy to a certain number, user-defined number of ticks above the cross price. And you can see that we get into the trade there, which is subsequently stopped out. So let me just show you how I've done this, and reasonably straightforward. In fact, I've created two different versions of this program, which I'll explain a little bit later on. But so we won't look at the inputs and variables at the moment. We'll look at those as we go through. So first of all, we set MP to be equal to market position, and we then calculate the averages. As you can see here, one of them a fairly slow and the other an exponential one with a period of 1. Then we find the difference between them. Now the variable diff is set as an intrabar persist variable. And what you'll also notice towards the end of the program is I'm storing that value also in diff last tick. So what we have which is an intrabar persist as well. So the diff and the diff last tick. The diff is the diff value for the present tick, and the diff last tick will be the value for the previous tick. And we'll look at that in a moment when we go through a printout. And then what we say is if diff is greater or equal to 0 and diff last tick is less than 0, then we need to do two things. We need to set a boolean called x above 2 to true, and this variable is intrabar persist, as is x price, and we set x price to the close of the current tick. And then if the fast moving average goes below the slow at any point, or we're in a trade, in a long trade, then we reset x above 2 to false. And then to enter the trade, we simply say x above 2 has to be true, and C has got to be greater or equal to x price, which is the price recorded when the cross occurred, plus num ticks above times tick size. And num ticks above is a user-defined number of ticks, and tick size we also calculate that here in the variables. And then we use set stop loss to set ourselves a stop loss. So let's just have a look at the trade that we were just looking at a moment ago and just sort of see what's happening with that. Now, as we go through this from the top, you'll see that the x above 2 becomes true straight away because the diff is positive, the diff last tick is negative, and the price 42.61 is set as the X price. And now that price will stay set again unless the fast moving average goes below the slow moving average, and then it goes above the slow moving average again. And then we calculate the entry price of 42.86, and you'll see here, if we just go down, let's have a look, where do we enter? Okay, so you see where we enter because MP becomes 1, and you'll see the entry price we're looking for is 42.86. That price is exceeded on this line, and so we enter the next tick at 42.83, and if we just verify that, whoops, you'll see that indeed we enter theoretically at 42.83. Now that is one way this program works, but you'll notice here we have a slightly different situation, and this is the situation where we cross and then we go over several bars, and it takes several bars before we get to this level here. So what I'm going to do is just change the date and times, and we'll have a look at that trade. So we're going from 1410 to 1530 on the 2nd. So we're going to verify the program. This will update the spreadsheet. It's going to close that, and then we'll reopen it in a second. So you can see it's recalculating here. Okay, so let's have a look at the spreadsheet. We're going to open it up again, and this is comma delimited. I'm going to open up read only. Okay, so starting at the top, you'll see that we have diff is minus, diff last tick is minus, so we do not have a cross yet. But if we go down the spreadsheet and see if we can see where x above 2 becomes true, there we go. So let's see if we can just home in, and you'll see that here we have diff is positive, diff last tick is negative, so the two indicators have crossed. We then set x above 2 to true. We can then set x price to be equal to what closes at the moment, and then we can calculate the entry price. Now, if the fast moving average goes below the slow and then goes above it again, this x price value will change. So let's just scan down and see if that happens. Yes, you can see here that the x price goes to 43.96, and the reason for that is you can see we have a little patch here where the fast goes above the slow again. So we continue, and then you can see MP is equal to 1, and let's just have a look at the actual trade. Okay, so we were hunting for a price of 44.21. Price went to that value, so we then entered the next value, the next tick at 44.2, and we also set x above 2, or reset x above 2 to false, because we're now long. So that's 44.2. Let's just verify that on the chart, and you can see 44.2. Now, one thing you might say is, well, that is fine, but what I really want is this to only enter on that crossover bar. I don't want the price continuing. So I've created a version to do that, which I've called tutorial 144B, logically, and it's going to turn off A and turn on B, and that's going to calculate. Incidentally, what I failed to mention to start with is that for these programs, they are expecting this to be set up as intrabar order generation, and also look inside bar back testing set to tick levels. So let me just show you how to change those as soon as this is calculated. Okay, so to verify or to change that for the first time, we go to the program we're using, go to Properties for All, and under the General tab, click Use Look Inside Bar Backtesting and set that to 1 tick level, and also Format, and under the Calculation tab, click Enable Intrabar Order Generation and Calculation. And you'll notice that we now just have an entry on this bar where the crossover occurred, but you might notice this very strange bar here, and at first glance you might assume that there is some sort of bug in the program, but actually what happened is this bar opened down here, and the averages did actually cross within this bar, and then the bar continued upwards, and so we have the cross. And if you were to look at the actual values, you'll see that that actually did occur. Now, if you didn't want something like this occurring, then you'd have to have different rules. But of course, bear in mind, you never know what's going to happen to the bar until the bar is completed. You may be a cross. That cross may have happened during the bar, but may not still be crossed, as in this case, at the end of the bar. Anyway, hopefully you will find this useful. Thank you.